All right. Welcome back, everyone. Today we're taking a deep dive into,
The investment world.
yeah, yeah, that's it.
Yeah,
And it looks like a pretty fascinating one, too.
absolutely. Should be fun.
So we've got your M1 Finance snapshot,
Hmm?
a detailed breakdown of your portfolio,
Huh?
plus your personal strategy documents.
Sounds good.
And to add a little context,
Sure.
we've got that CNBC article on the current economic situation,
Right.
trying to paint a picture of where things stand in the markets today.
Yeah.
So today our mission
Okay.
is to figure out how your portfolio is actually doing,
Mm-hmm.
how your strategies are working out,
Sure.
especially in this kind of economic climate,
Right.
and
Okay.
what kind of opportunities or maybe even roadblocks might be ahead.
Yeah. No, that's a great way to put it. It's a really interesting time, that's for sure. A lot of moving pieces these days.
It really is. So first of all,
Okay.
I got to say, congratulations are in order
Oh.
because that M1 Finance
Hmm.
snapshot
Yep.
is showing some serious gains.
Oh, wow.
Since last October, a hypothetical $100,000 investment
Okay.
would have ballooned up to
Let me guess, like 130.
even higher, $156,430.
Wow, that's impressive.
That's a 56.43% increase.
Seriously, that's fantastic.
Like the graph
Yeah.
shows a really steady climb.
No kidding. Even with everything that's been going on.
Even with all the market's ups and downs, those hiccups we've seen.
Wow, to see that kind of growth
Yeah.
in this environment, color me impressed.
Yeah.
Go on.
And the CNBC article,
Uh,
it's painting a picture of a cooling economy
mm-hmm.
that's still battling,
Inflation.
inflation.
Yeah.
Exactly. Yeah. Makes you wonder how some portfolios are doing so well.
I know. So to see yours thriving in the middle of all that is
Well, it's quite a feat.
quite a feat, yeah.
So how'd they do it? Spill the beans.
Okay, so let's break down the success story, shall we?
Let's do it.
The M1 finance breakdown
Yeah.
and the portfolio holdings documents.
Oh, show us that you've actually gone with a classic kind of a barbell approach to your investments.
Barbell approach. Okay, I'm listening.
So 35% in market ETFs.
All right.
Think of those as like your workhorses,
Mm-hmm.
steady and reliable.
I like it.
Then 20% in growth stocks,
Okay, those are more.
like sprinters.
Ah, got it.
They're aiming for that,
Finish line.
the finish line, those big wins.
Makes sense.
Then the rest of your portfolio,
Okay.
you've diversified it
Nice.
across real estate, consumer, industrials, technology, finance, and utility.
So a bit of everything.
A bit of everything,
Gotcha.
all at 5% each.
Okay, so this barbell strategy, I'm guessing it's all about finding that balance, right? Between playing it safe and going for those home runs.
Exactly.
Interesting. It seems to be working for them, that's for sure.
It really is. Now, looking at your individual holdings in the portfolio holdings document, some big winners jump out.
Oh, like what?
Well, Tesla, for instance, it's up over 100%.
Whoa, Tesla. No surprise there.
Right. And the Vanguard Information Technology ETF, VGT,
VGT.
that one's trailing close behind at a 75% gain.
Now, those are some solid returns.
But, of course, not every stock's going to be a superstar.
Right.
That's where that diversification comes in.
Ah, I see. It's like spreading the risk.
It's like having a team of players. Some might have an off day,
Makes sense.
but the strong ones can really carry the team forward.
I like that analogy.
And even with Community Healthcare Trust, CHCD,
CHCT, yeah.
it's down 25%.
Ouch.
But those gains from your other holdings,
Yeah.
they help cushion the blow.
So it's all about balance.
It's a textbook example
Mm-hmm.
of why diversification is so important,
Especially in these crazy times.
especially in these crazy times, yeah. Now, let's get to the brains behind this whole operation, your strategy.
Okay, the strategy, and this is where it gets interesting.
Your portfolio strategy document.
Mm-hmm.
It reveals that you're using a pretty clever approach.
Oh, tell me more.
You're taking those gains from your growth stocks and you're feeding them into your dividend stocks
Interesting.
through rebalancing,
So the growth is fueling the income. Smart.
like creating a little ecosystem within your portfolio. Right?
Very cool. And I bet M1 Finance makes all that rebalancing pretty seamless, huh?
It does. It's all automated.
That's fantastic.
It's like a perpetual motion machine for your portfolio. I love that idea.
I'm starting to see why they're doing so well.
And it doesn't stop there.
Oh, there's more.
You've also got a dividend reinvestment plan in place.
Ah, so you're compounding those returns over time, like a snowball effect.
Exactly. It just keeps getting bigger.
Smart move. What?
And your weekly recurring purchases.
Okay, those are 4.
They're taking advantage of dollar cost averaging.
Right, smoothing out those market bumps by buying consistently.
You buy a bit more when prices are low.
And a bit less when they're high.
It averages out your purchase price over time.
That's a classic strategy for a reason.
So all these strategies together,
Yeah.
they really paint a picture of a long-term approach.
Right, not chasing those get-rich-quick schemes.
This is about building wealth
Slowly and steadily.
brick by brick. And by the way, it's clearly working.
It definitely is. Makes you wonder how so many people overcomplicate investing. Sometimes the simplest approaches are the best.
I totally agree. Now, with that solid foundation in place, let's shift gears a little bit.
Okay, what's next?
Let's talk about risk management.
Risk. Everyone's favorite topic.
Your risk strategy document
Yeah.
reveals a bit of an interesting twist.
Okay, I'm intrigued. Lay it on me.
Instead of the typical stocks and bonds balancing act,
Right, the classic approach.
you've decided to go with 70% dividend stocks
Interesting.
and 30% growth stocks.
So they're really leaning into those dividends.
It's like creating your own risk-reward balance, using those dividends to provide a little downside protection when the market gets shaky.
And I bet those dividends go hand in hand with that rebalancing strategy we talked about.
Exactly. It makes for a very resilient portfolio, one that can handle those market storms.
They're definitely thinking long term. I like it.
But there's another layer here.
Oh. Tell me more.
It's in your margin trading risk strategy document.
Margin trading, always a hot topic.
So you're willing to use up to 50% of your available margin
Okay, that's bold.
to seize those opportunities when the market dips.
Right, buy low, sell high. The age-old wisdom.
But you've added a crucial detail.
Which is?
You only use margin when the interest rate is lower than your dividend yield.
Wow, so you're not just borrowing money, you're strategically using it to boost your returns.
Turning margin into a profit-generating tool.
That's next level thinking right there.
It's savvy, but it definitely requires keeping a close eye on things.
For sure. You got to know what you're doing.
You need a clear understanding of the risks involved.
Absolutely. But they seem to have that under control.
So far, so good, but we can't forget about the bigger picture.
Right, the economic backdrop. We can't ignore that.
The CNBC article highlighted those recent rate cuts from the Fed.
A sign of cautious optimism, they called it.
But then there's that lingering inflation.
The one we just can't shake.
And those factors, well, they can really shake things up in your portfolio.
Both good and bad.
Good and bad, exactly.
So, we've got potential tailwinds and headwinds. That's today's market in a nutshell. Makes you wonder what the future holds.
That really does. We'll dive into all that in just a bit.
So before we get too caught up in all the what-ifs about the future, let's take a closer look
Okay.
at what's happening right now,
Good idea.
economically.
So what specifically
Yeah.
in that CNBC article caught your eye?
You know, one thing that really stood out to me
Yeah.
was that report on consumer spending. It seems like people are still out there spending money, which is kind of surprising.
I mean, with the economy cooling down like this.
Exactly. And inflation still,
Being a pain.
being a pain in the neck.
Right.
Yeah.
But people are still shopping.
They are. Retail sales even beat the forecasts.
No way.
In November.
Really?
Yeah.
So what do you make of that?
Well, it tells me that consumer confidence
Okay.
might be a little stronger
Than we think.
than some of those indicators would suggest.
So they're still willing to open their wallets,
Yeah, they are.
even with all the uncertainty.
Yep.
Which is good.
Right? It's definitely good news for businesses,
Yeah.
for the economy in general.
So good for our investors' portfolio then.
Potentially. Yeah.
They've got companies like Coca-Cola,
Right.
JP Morgan Chase,
Mm-hmm.
that really depend
On people spending money.
on consumer spending. Exactly.
So if this trend continues,
Yeah.
it could mean
More revenue,
more revenue,
higher stock prices
potentially.
for those companies.
Yeah, that's the hope.
Okay, so that's the good news.
Right. But the article,
Yeah.
it also pointed out some potential weaknesses in the labor market.
Oh, right. Yeah.
Things aren't looking so good.
It mentioned something about job growth.
Yeah, the job growth is kind of concentrated
Okay.
in certain sectors.
Which isn't necessarily a good sign
Not rude.
for the overall economy, right?
Right.
It specifically mentioned a slowdown
Mm-hmm.
in manufacturing,
And professional services.
which is kind of concerning.
It is, because it makes you wonder
Yeah.
if this consumer spending can really last.
Right. If people aren't working,
Exactly.
they can't keep spending.
Exactly.
So it's a little bit of a mixed bag then.
Yeah, I'd say so.
You've got good signs from consumers,
Hmm.
but some worrying signs from the labor market.
It's a bit of a tug of war.
No wonder the stock market's been so volatile.
Right. Up one day, down the next.
The CNBC article even said that the Dow Jones
Yeah.
has had its worst few days
Oh, wow.
since the 70s,
Seriously.
which is a good reminder
Oh.
that even with a great portfolio,
Yeah.
you can't completely avoid risk.
No, you can't.
But that's where our investor strategy
Mm-hmm.
really comes in handy.
How so?
All that diversification,
Right.
the risk management,
Mm-hmm.
it helps soften the blow.
When the market takes a tumble.
Exactly.
It's like having shock absorbers.
Your portfolio.
Exactly.
And let's not forget about that margin strategy.
Wow, yeah, that was a clever one.
Using margin only when the interest rate is lower than your dividend yield.
It's risky,
It is.
but it can really pay off.
And it seems to be working for our investor.
It is.
So it's a strategy.
That really fits their overall approach.
Taking calculated risks,
Mm-hmm.
looking for that long-term growth.
And with interest rates maybe going even lower,
Like the article suggested.
there might be even more opportunities.
To use margin effectively.
Exactly.
But we got to remember,
What?
margin can amplify losses too,
Oh, for sure.
not just gains.
So you got to have an exit strategy and a solid risk management plan.
Absolutely.
Can't just jump in blindly.
Definitely not.
Now, I'm really curious about how they came up with that 70-30 split.
You mean the...
Dividend stocks versus growth stocks.
Right.
It's not the usual approach.
No, it's definitely unique.
But it's working.
It is.
So what's the logic there?
Yeah, walk us through that decision.
Well, I think it comes down to
Yeah.
finding that balance
Between
getting income
Okay.
and growing your capital.
mm-hmm.
The dividend stocks are like
your foundation.
your bedrock. Yeah.
Steady income,
No matter what the market's doing,
which is really important
especially now.
with all this volatility.
Exactly.
And then you've got the growth stocks.
Like Tesla,
Right.
aiming for those big wins.
Driving the portfolio's growth.
It's like a two-pronged attack
I like that.
on building wealth.
And by rebalancing regularly,
Mm-hmm.
you make sure neither side gets too out of control
You keep that balance
between risk and reward. So it's a clever way
to take advantage of opportunity.
while managing risk.
Yeah.
And what I'm really impressed by
Yeah.
is our investors' commitment
To what?
to staying informed
Ah, yes. Knowledge is power.
about the economy,
Mm-hmm.
the markets.
You got to stay on top of things.
They're constantly monitoring,
Right.
adjusting their strategies.
It's based on what's happening.
It's not, I just said it and forget it.
No, not at all.
You got to be proactive.
Absolutely.
So speaking of being proactive,
Okay.
given everything we've talked about,
Mm-hmm.
the economic outlook,
Right.
are there any particular sectors
That's a good question.
or investment strategies
that I'm excited about.
that you think our investors
Consider.
could consider? Yeah.
Well, we've talked about
Lower interest rates,
lower interest rates.
potentially making margin even more attractive,
Mm-hmm.
and
The continued strength.
of consumer spending.
Yes. So maybe.
Let's dive into those areas.
Okay.
Explore some potential opportunities.
For adjustment.
And new strategies.
That could boost returns even further.
So we were talking about, you know,
Possible tweaks.
yeah,
Adjustments.
new avenues to explore
Mm-hmm.
given the economic outlook.
Right.
But before we go there,
Okay.
I kind of want to revisit one of your all-star players,
Okay.
Tesla.
Ah, Tesla, yes.
Over 100% gains.
It's been a good one.
It's been phenomenal,
Well,
but
how sustainable is that?
okay,
In the electric vehicle market,
it's getting crowded.
it is. There's a lot of new competition.
All these traditional car companies
Right, they're jumping on the bandwagon.
and consumer tastes, they're changing all the time.
Yeah, it's a fast-moving space.
And then there's the tech side of things.
Oh, yeah, don't forget about that.
Battery range, charging infrastructure.
It's constantly evolving.
So even for a pioneer like Tesla,
Mm-hmm.
they really need to stay ahead in terms of innovation.
Absolutely, or they'll get left behind.
And this kind of brings us back to what? One of your core strengths, I think.
Which is the
Diversification.
yes, diversification.
Not putting all your eggs in one basket.
Even with a winner like Tesla.
Yeah, it's about spreading that risk
Exactly. You're not betting on any one company.
to make or break your portfolio. Speaking of which, let's talk about your Vanguard Information Technology ETF.
Oh, the VGT.
Your VGT, yeah.
Another good one.
It's been a solid performer,
It has.
giving you exposure
For
to
that broad tech growth.
the whole sector,
Yep, all those big players.
the up-and-comers too,
It's a good way to ride that tech wave.
without picking individual stocks.
Makes sense.
And then, of course,
There's
those steady dividends
yes, the
from
dividend.
companies like
JP Morgan Chase.
JP Morgan Chase.
Coca-Cola.
Realty Income Corporation.
Different sectors.
But they all pay those consistent dividends.
It's all about that steady income stream.
Right in line with your strategy.
Exactly, those payouts.
Hmm.
They're like a buffer those market swings.
That volatility.
No matter what's happening in the short term.
Those dividends keep coming.
Which is really comforting.
Especially now.
When things are so uncertain.
It's like a built-in safety net.
Exactly, you can ride out those dips.
Without panicking.
Without making rash decisions.
All right, so let's get back to those potential adjustments.
Okay, yeah.
We were talking about
Lower interest rates.
making margin even more appealing.
Yeah, it's tempting.
So, how might that affect your strategy going forward?
Well, it's definitely something to consider.
Yeah.
Those lower borrowing costs.
Could open up some opportunities.
To use margin more strategically.
But it's still a balancing act.
It's a double-edged sword, right?
Exactly. Higher reward.
Protects your risks, too.
So you really got to understand your risk tolerance.
And have a plan.
Before you jump in.
Don't get carried away.
And we can't forget about inflation either.
Oh, yeah, that's the big one.
It's been sticking around.
Like a bad cold.
And it could really impact
the purchasing power
of your dividends.
If it keeps going up.
You might need to think about
protecting that income.
Diversifying into some
assets that do well
during inflation.
Things like commodities.
Real estate.
Inflation-protected securities.
Yeah, there are options.
Depending on your goals.
And your risk appetite.
Of course.
So we've covered a lot of ground today.
We have. It's been a great deep dive.
You've built a really solid portfolio.
They have.
A sophisticated strategy.
Well thought out.
You're balancing growth and income. And you're staying ahead of the curve.
You're a model investor, really.
It's impressive.
And you know what? It all comes down to staying informed.
Right.
Being adaptable. Sticking to your goals.
Those are words to live by.
Not just for investing.
But for everything.
Absolutely.
So for our listeners out there.
Think about this.
How can you apply these principles?
Diversification.
Rebalance.
Continuous learning.
To your own journey.
It's a journey worth taking.
And with the right approach.
You can achieve amazing things.
That's all the time we have for today.
But keep exploring.
Keep learning.
And keep diving deep into the world of finance.
We'll see you next time.